Hi everyone, welcome back to Gold Rush Reporter, your go-to channel for deep insights into gold and silver. If you're new here, make sure you subscribe and hit the notification bell, because today we're diving into something big happening with both metals. Over the past 2 years, gold has doubled in price. It was 1,232s in November 2023, and today it's twice that. That's an extraordinary move in such a short time. But before you just celebrate, let's pause and ask, what does this really mean? When gold moves like this, it's rarely just about gold itself. It's about the currency behind it. Historically, such rapid gains have signaled deeper changes in money, not just in the market. For example, look back at 1971 when Nixon ended the dollar's convertibility to gold. The US left the gold standard, and suddenly gold was free to float. Within a decade, gold climbed 24 times its value, preserving wealth while the dollar itself was being re-engineered. In other times, like the 2008 financial crisis or even 1933 under Roosevelt, gold spiked not purely because it was a good investment, but because the financial system around it was shifting dramatically. Right now, gold isn't just outperforming the S&P 500, it's signaling that something could be changing with the global currency system. Investors need to think about gold not only as an asset to trade, but as a hedge against systemic risk. If history teaches us anything, when gold runs like this, it's acting as a bridge between one financial system and the next. Meanwhile, silver is starting to follow a similar story. Historically considered either an industrial metal or a monetary metal, silver is now emerging as a hybrid, both critical for technology and gaining a monetary dimension. Central banks haven't fully jumped in yet, but the moves we are seeing, like India allowing silver jewelry to be used as collateral and Russia actively buying silver for reserves, suggest that a larger wave may be forming. This could drive silver into triple-digit territory in the coming years, potentially $150 to $200 an ounce, or even higher, as demand keeps growing and stockpiles shrink. We're also seeing nations like China, the US, and Australia treat silver as a strategically critical resource. China is restricting silver exports, the US now officially lists it as a critical mineral, and Australia has included it in its high-tech metal strategy. This means governments are protecting silver for industrial, energy, and national security reasons, which only increases its value for investors who already hold it. Today, we'll unpack these historical parallels and current developments. I'll break down why central banks' actions, stockpile dynamics, and global regulations may drive silver's next big move, and why gold continues to serve as a powerful financial anchor in uncertain times. Let's dive deeper into what's happening with silver and how central banks are influencing the market. At the recent New Orleans Investment Conference, a question came up from David in Poland. Do central banks buy silver? And could one bank buying it trigger others to follow? This is important because if multiple central banks start buying silver, it could create a snowball effect, driving prices parabolic. So far, there are a few key examples. India has taken a historic step by allowing silver jewelry to be used as collateral for loans, similar to how gold has been treated for decades. This isn't a full central bank purchase, but it signals that silver is being recognized as monetary. Then we have Russia, which explicitly announced silver purchases for state reserves, allocating over $500 million over 3 years. This is significant because Russia is acting as a pioneer and other nations may follow if they see the benefits. Saudi Arabia has also invested in silver, although in the form of ETFs like SLV and SIL rather than physical silver. While these are not the same as owning the metal outright, they represent a strategic move to gain exposure to silver's value. The fact that central banks are starting to consider silver at all, even cautiously, shows a shift in thinking. Meanwhile, China is taking a different approach by restricting silver as a key export mineral starting in 2026. This means any silver leaving China will require a license, giving the government control over global supply. With China being a major supplier, this move could create shortages in other countries, particularly in tech and AI industries that rely heavily on silver. The United States has also recognized silver as a critical mineral in its 2025 final list of 60 critical minerals. This highlights how strategically important silver has become for national security and technological infrastructure. Australia, too, has included silver in its 10-year high-tech metals strategy as a priority mineral. Across 3 continents, governments are sending the same message. Silver is not just an industrial metal. It is increasingly vital for both technology and monetary systems. Globally, silver supply is struggling to keep up with demand. Stockpiles have been shrinking since around 2020, and physical delivery is becoming more important than paper contracts. Investors increasingly want real silver in hand rather than relying on futures or ETFs, reflecting growing caution in the market. This structural deficit is compounded by the growing demand for AI, renewable energy, and high-tech infrastructure, all of which require silver. At the same time, silver is being bought for investment and savings purposes, particularly in forms like silver eagles, which remove metal from industrial circulation. So, when you combine central bank interest, governmental restrictions, industrial demand, and investment demand, silver is positioned for potentially significant gains. Analysts like Mike and Alan believe we could see silver rise dramatically in the coming years, with estimates ranging from $150 to $200 an ounce, and potentially even higher if these trends continue. The bottom line, central banks and governments are increasingly recognizing silver as a strategic asset. Investors who understand these dynamics and act early could benefit immensely. History shows that when precious metals gain attention from the state, prices can move fast, and silver's current environment suggests we might be approaching one of these moments. Let's examine silver through the lens of history and price cycles, because understanding past trends gives us a clearer picture of what might happen next. Silver isn't just an industrial metal, it has a strong monetary component, and its market has always responded dramatically when currencies or financial systems are under pressure. Looking back, silver has experienced major rallies during times of systemic change. In the 1970s, for example, both gold and silver saw massive moves. Gold's rise was triggered by the US abandoning the gold standard, while silver also benefited from inflation and monetary uncertainty. That period teaches us an important lesson. Metals don't just rise because of demand. They rise when the money they're measured against is losing value. Fast forward to recent decades. Silver peaked around 49 to 45 in 2011 after a long bull run driven by the post-2008 financial crisis environment and global monetary stimulus. Following that peak, silver prices corrected as new supply came to market, but the structural deficit in silver continued to persist. Over the last 5 years, stockpiles worldwide have dwindled, meaning that supply has not kept pace with growing demand from technology, energy, and investment sectors. Currently, silver is exhibiting a hybrid demand pattern. It's still crucial for industrial use, especially in AI infrastructure, solar panels, and electric vehicles, but it's also becoming a monetary and strategic asset. Governments and central banks are recognizing this dual role. India allows silver to be used as collateral for loans. Russia is buying silver for its state reserves. China is controlling exports. The US has classified it as a critical mineral, and Australia has included it as a priority metal. These moves indicate silver is evolving from a commodity into a strategic reserve. From an investment perspective, silver's dynamics are unique. When people purchase silver eagles or other investment-grade silver, that metal is effectively removed from industrial circulation, tightening supply. The premiums on these coins are high, which reinforces the idea that physical silver is becoming a scarce and sought-after asset. Combined with the structural deficit, this sets the stage for strong upward pressure on prices. Now consider the potential for central banks to amplify this trend. If Russia's purchases signal a new wave of silver accumulation among other nations, we could see a cascading effect. Central banks may begin to regulate, acquire, or use silver as collateral, pushing prices even higher. Analysts project that silver could climb toward $200 an ounce, or even into quadruple digits under extreme conditions, especially if global financial uncertainty escalates. The parallels with historical bull markets are clear. Every major rally in silver has coincided with either a monetary reset, currency weakness, or strategic recognition by governments. Today, we're seeing all of these signals: rising demand, government recognition, supply restrictions, and undervaluation relative to gold. It's a convergence that rarely happens all at once. For investors, the takeaway is that silver is no longer just a commodity to trade. It's a strategic asset to hold. Accumulating physical silver now could provide both a hedge against inflation and an opportunity to participate in a potential structural bull market. The combination of industrial demand, investment demand, and government interest makes the current environment unlike any other in recent history. In short, silver is stepping out of gold's shadow. Its monetary component is strengthening, supply is tightening, and the market is increasingly aware of its critical role in technology and national security. This is shaping up to be one of the most compelling periods for silver in decades. Silver's story is becoming increasingly global, with governments, central banks, and industries all playing crucial roles in shaping its future. The metal's industrial importance is obvious. Used in AI infrastructure, solar panels, batteries, and high-tech electronics. But it's the growing recognition of silver's strategic and monetary role that's capturing attention. Countries are starting to treat silver not just as a commodity, but as a critical asset for national security and economic resilience. India is leading the way in monetary recognition. For decades, gold jewelry has been the primary collateral for loans. But now silver jewelry can also serve that purpose. This expansion shows that silver is gaining formal recognition as a monetary tool, signaling broader acceptance beyond private investment. While this isn't the same as direct central bank accumulation, it lays the groundwork for institutional acknowledgement of silver's value. Russia has taken a more direct approach, purchasing silver explicitly for its state reserves. Over 3 years, it allocated more than $500 million to acquire silver, positioning itself ahead of potential currency instability. This is strategic thinking. With gold already expensive, silver presents a more accessible way to accumulate value while retaining leverage against gold's long-term trajectory. Saudi Arabia, on the other hand, has invested in silver ETFs, signaling interest in exposure to silver without holding physical metal. Even though these aren't physical purchases, they reflect the growing awareness of silver's strategic and financial importance. China is asserting control in the supply chain. By regulating silver exports, it ensures that critical resources stay within national borders, while also managing global influence over technology-dependent industries. This move is a reaction to both domestic policy goals and the ripple effects of international trade tensions. If the West relies more heavily on silver than it produces, Chinese export restrictions could create shortages and upward price pressure. The United States has formally recognized silver as a critical mineral, highlighting its essential role in modern infrastructure, energy, and defense systems. Australia's strategy mirrors this, naming silver as one of 5 priority metals for the next decade. These actions across 3 continents signal a coordinated acknowledgement of silver's growing significance in both industrial and monetary contexts. From a market perspective, physical silver is increasingly scarce. Investors who purchase coins or bars remove metal from circulation, limiting the supply available for industrial use. Futures markets also reflect this tightening, with more investors opting for actual delivery instead of paper claims. This creates a situation where demand continues to rise while available supply shrinks, creating strong upward pressure on prices. Historical comparisons reinforce the potential for silver's dramatic moves. The silver bull market of the 1970s provides a precedent. Strategic demand, combined with monetary shifts, led to massive price gains. Today's situation mirrors that in some ways. Structural deficits, industrial and investment demand, government recognition, and growing central bank interest all point to a market that may be on the verge of a significant rally. For investors, this means timing and strategy are crucial. Accumulating silver now positions holders to benefit from both industrial growth and potential monetary or strategic shifts. Holding physical silver ensures security against supply chain constraints and offers leverage for potential future price surges. The convergence of these global trends creates an environment unlike anything seen in decades, making silver one of the most compelling assets for those looking to preserve and grow wealth. In summary, silver is evolving from a secondary industrial metal into a cornerstone of strategy, finance, and investment. Its dual role as both a monetary and industrial metal is becoming more widely recognized. Supply constraints are tightening, and governments are taking actions that could further influence prices. Investors positioned now are likely to benefit as the market continues to mature and demand increasingly outstrips supply. As we wrap up our deep dive into silver's evolving role, it's clear that this metal is no longer just a supporting player in the global economy. It's moving into a starring role. Historically, silver has been undervalued compared to gold. Yet today it's gaining attention for its industrial applications, monetary potential, and strategic importance. With countries like India expanding silver as collateral, Russia actively accumulating it for reserves, China controlling exports, and the US and Australia recognizing it as a critical mineral, the landscape is shifting rapidly. This convergence of factors suggests a strong likelihood of rising silver prices in the coming years. Structural deficits in supply, increasing industrial demand, and the growing appeal as a monetary hedge make silver uniquely positioned. Even with $150 to $200 per ounce, the market might still struggle to satisfy global demand. Investors who hold physical silver or invest in high-quality silver mining stocks could find themselves at a considerable advantage. We also need to recognize the psychological component of the market. Investor behavior often drives short-term price swings, as we saw with recent dips and spikes. Fear of missing out, FOMO, pushes buyers into action, while caution during sale periods causes hesitation. Understanding these patterns can help you navigate volatility while maintaining a long-term strategy. Silver is both a savings vehicle and a potential investment for substantial gains, and this dual role is becoming increasingly pronounced as governments and central banks start treating it as strategically important. Looking back at historical parallels, like the 1970s bull market, shows that silver can experience explosive gains when structural, monetary, and geopolitical factors align. Today's scenario shares similar traits: supply deficits, rising industrial demand, and growing monetary recognition. If history repeats, or at least rhymes, silver could reach unprecedented highs, potentially even approaching the quadruple-digit range for extreme cases, though conservative forecasts place it in the low triple digits over the next few years. For Gold Rush Reporter viewers, the takeaway is simple. Accumulate wisely, understand both industrial and monetary demand, and be aware of geopolitical trends. Physical silver offers security, while strategic investment in mining projects or ETFs, with caution about paper claims, allows for leverage on market shifts. Timing is crucial, and keeping an eye on central bank actions, export controls, and government mineral policies will provide foresight into price movements. Before we close, remember that this channel is dedicated to breaking down complex market dynamics into actionable insights. We focus on gold and silver, analyzing both historic patterns and current developments to help you make informed decisions. Your engagement matters. Comment below with your thoughts on silver's next move. Hit the like button if you found this analysis valuable, and don't forget to subscribe with notifications on so you never miss an update. From all of us here at Gold Rush Reporter, thank you for watching. Stay vigilant, stay informed, and as always, keep stacking wisely. Until next time, I'm your host, guiding you through the precious metals world. See you in the next episode.